Today we will discuss the impairment of asset. To understand generally the principle of recognizing an impairment loss, and to know the meaning of recoverable amount, fair value less cost of disposal, and value in use, and to compare PFRS for SMS and full PFRS in relation to impairment of assets. So we have here the general principle of impairment, which state that general principle of impairment of asset is recoverable amount of an asset is greater than carrying amount is equal to carrying amount minus recoverable amount. So it has a reduction. The reduction is an impairment loss that is recognized immediately in profit or loss. So when we say impairment of loss, it is the amount which the carrying amount of an asset or cash generating unit exceeds in its recoverable amount. So it has the higher between the fair value less the cost disposal and the value in use. When we say fair value, it is a price that would be received to sell an asset or paid to transfer a liability in orderly transaction between the market participants at the measurement date. So when we say cost of disposal, it is excluding finance cost and income tax expense. And value in use is presented value of the future cash flow expected to be deprived from the asset or cash generating unit. So we have here the elements of reflecting the calculation of the value in use. Estimate of future cash flows, appropriate discount rate, and expectation about possible variation in the amount or timing of those future cash flows. We have also time value, market risk-free rate of interest, price for bearing the uncertainty inherent in the asset, and other factors such as liquidity that market participants would reflect in pricing the future cash flows. So the future cash flow include in the value of use, the cash inflows from the continuing use of asset. We have also the cash outflows necessarily incurred to generate the cash inflows from the continuing use of asset. And the last, we have net cash flows received or paid on the disposal of the asset at the end of its useful life. So the future cash flows included in the value in use, we have cash inflows or outflows from the financing activities, income tax, future cash flows, and future cash flows that are expected to arise from improving or enhancing. So the appropriate discount rate in calculating value in use, we have pre-tax rate, the time value of money, the risk is specific to the assets for which the future cash flow estimates have not been adjusted. So the discount rate used in measuring value in use shall not reflect the risk for which the future cash flows estimates have already been adjusted to avoid double counting. So the external sources of information indicating impairment, we have 4. The significance of decreasing or decline the market value, the significant change of technological, market, legal, and economic environment, and so forth. So about the internal sources of impairment, we have 3. Evidence of obsolescence or physical damages of an asset. We have the adverse effect on the entity. For example, the asset is a part of restructuring or held for sale, or the asset is ideal. Last, the evidence of the economic performance of an asset will be worse than expected. So impairment loss for cash generating unit, we have first to the goodwill if any, and then second, then to the other non-cash asset of the unit prorata, I don't know, based on the carrying amount. So reversal of the impairment loss, we have 4. Yes. To SME shall estimate the recoverable amount of the asset or cash generating unit at the current period date. Second, this increases the reversal of impairment loss that is recognized immediately in profit